Hi there, welcome to Kneppy Invest and welcome to the 22nd of July 2025. Time is currently 4:26 p.m. So I am recording this video a little bit later than I usually like to do, which is about 3 p.m. And there is a reason behind that. Should I mention the reason? Yeah, why not? So my parents are away for a few weeks. They're going on this cruise and they do have this massive TV. And typically when they're home, I won't watch TV during the day. But today I was watching some TV on their pretty big TV screen and time got away from me. And I didn't realize until about 20 minutes ago. I was like, wow, I should get into recording a video. So, anyway, I'm in heaven right now. Not literally. I am not dead, figuratively. I'm in heaven right now. I'm by myself, which is the way I like it for 2 weeks. In fact, it's 2.5 weeks. And also, this is my favorite time of the investing year. Repeat that. This is my favorite time of the investing year, late July into August. Hopefully, the reasons why it's my favorite time of the investing year is apparent. If it's not, just look at quarterly reports being released right now, and that should increase over the next week or so. And then August, full year results. Most companies on the ASX release their full year results in August. Some companies release their half year results, and some other companies have a different financial calendar. Okay, the agenda for today's video, we'll go through the ASX today, have a look at the best and worst performing sectors, indices, companies. Then we'll have a look at the top 5 stocks of the day, heavily skewed towards those companies that did release Appendix 4Cs and 5Bs today. Then we'll have a look at the chart of the day, a company I featured in Sunday's technical update. And the reason I featured this company in the update was because simply of the volume increase this company has seen over the last month or so, but we hadn't seen any price action. Well, did we see price action yesterday? The share price of this company went up 25% on really big volume, no announcements. So I have read in a few different places that sometimes volume precedes price. And this sort of verifies that thought that sometimes volume precedes price. I just wish I was confident on that particular fact. I'm putting fact in quotations because it may not be fact. I haven't seen any research done on it. I've just read it. Anyway, so that company is Orbital Corporation. And I will have a look at one of your comments. And this is, by doing this, by incorporating one of your comments, I can include another company that released their Appendix 4C that did not make it into the top 5 stocks of the day. Okay, now on to the ASX today. I always say it's been an intriguing day, and today is no different. Now, in the end, ASX 200 up 0.1%. At one point today, the ASX 200 was up 0.5%. Pretty good day for small caps and resources. No surprise there. I'm assuming gold's had a really good day, iron ore. But RBA did have some minutes today, and here it is. I had a quick read of this. It says it held its cash rate steady during its July meeting, but they did explain why. And I think there's less optimism that the mark or the RBA will drop interest rates in August. And maybe that's why we saw a little bit of weakness in the market today from the highs, and maybe why one particular sector had a really bad day. I'm just guessing here, but no surprise here. Some of the minutes anyway. So let's and to be honest with you, I would not be overly against RBA maintaining interest rates at 3.85% at the next meeting. I would not be against that at all. Okay, now on to the best and worst performing sectors. And you can see, at one point in the afternoon, the XJO and XAO were both negative by about 0.1%. So we did see a little bit of a rally in the last hour of trading. Maybe that was just a buy the dip mentality when it comes to the banks because banks were down big. Marcus Padley on the property versus share debate. Investment properties are for rich old people. Okay, interesting. Okay, best performing sectors. Materials and healthcare both up 2% or more. There you go. In fact, a fairly bifurcated market today. And financials down 1.65%. No surprise there. The banks had a pretty bad day. Banks down 2.32%. So that's even worse than I thought, maybe. Gold had a really good day. In fact, when I woke up this morning, the thing that really stood out to me when I looked at overseas markets and commodities was a really good day for gold, but I wouldn't have expected that. Now, I did have a look at the top gainers today and the top losers. And the thing that really stood out among the top gainers by market cap were gold companies. So a really strong response for some gold companies. We'll have a look at that in a second or so. Healthcare up 2.08%. Pretty good day for CSL. Also had a look at that. It was up about 3 to 4%. And by far, CSL is the biggest healthcare company. So no surprise there. Well, healthcare had a good day just because of CSL. And ASX 20 down 0.14%. The banks. That's why. So let's have a look at the ASX 20 just to see what's happened. And I'm assuming iron ore's had a really good day. I would also assume the four worst performing companies in the ASX 20 were the four big banks. Now, there's the chance that one other company made it into that list, but because of how the banks performed today, I wouldn't be surprised to see one of the banks down 3%. So let's have a look. I'm going to say 10 companies up, 10 down. I'm going to say 11 down, 9 up. Oh, it was the wrong way. I should have said 11 up, 9 down. Yeah, that's what I meant. That's what I meant. Yeah. Okay, so let's have a look at the worst performing companies. Let's see. There you go. CBA down, yeah, 3.06%. NAB down 2.69%. Westpac 1.27%. And oh, ANZ actually did better than Brambles and Wesfarmers. There you go. So ANZ, which is the better value of the banks, only down 0.77%. Okay, so in a way, not surprised here. CBA is by far the most overvalued of the banks. In fact, someone apparently recently said it's the most overvalued bank in history. There you go. There you go. So it's just not me saying it. So no surprise CBA is down. And I'm guessing that the reason the banks are down big today is because of the RBA minutes. The way to actually, I'm not sure what time they release the RBA minutes. And let's just have a look at CBA's 1 minute chart. So this could explain what's happened today, particularly with the ASX dropping after a nice little rise on open. And funny enough, TradingView has decided not to work. So let's just refresh. So one thing, TradingView is becoming less and less reliable, I've noticed, since I started using it. So, oh, 2 bad days in a row. Is this the end of the uptrend for CBA? I'm not going to call it just yet. Let's have a look at the 1 minute chart. There was a big drop in share price at 11:06 a.m. This is taking way too long. Nah, share price started to drop almost immediately. Yeah, so I'm not sure if we could say this definitely was because of the RBA minutes, but a pretty bad day for CBA. And the chart is starting to look the weakest it has been for a while. And yeah, TradingView has just gone so quiet. Not quiet, slow. Share price down a fair bit from the highs. And I wouldn't be surprised again if we start to see buy the dip mentality. So retail investors saying, oh, the share price of CBA is down. There's time to buy because it's better value. But again, it's still significantly overvalued. Okay, let's go back to the ASX today. Best performing companies, CSL, yeah, no surprise there. And then we have Rio Tinto, Fortescue, BHP. Yeah, so pretty good day for iron ore miners. I was going to say investors. And it would be a pretty good day for iron ore investors too. And Pro Medicus and WiseTech up pretty good. Not surprised there because the Nasdaq was up 0.5%. Dow Jones was down. But funny enough, Russell 2000 was down about 0.6%. And small caps had a really good day on our market. So a bit of a disconnect between small caps in the United States and small caps here. Okay, now on to the top gainers. So I have gone through this. And just to sort of find a company I could just speak briefly about. So not iSynergy. In fact, share price up 3% on fairly low turnover. They did receive, I'm pretty sure, a price query from the ASX because they did go into a trading halt. So we won't talk about that company. Mad Paws up 73% on a takeover bid. I'm just wondering why anyone would want to take over more Mad Paws. That's just me. Betmakers is in my top 5. In fact, it's a stock of the day, so we can talk about that company later. And other than that, nothing much here. Although PP Group did release something today. But the company I want to talk about is Vanadium Resources. Share price up 78% on pretty big turnover. Now, this is not the sort of announcement that would get me overly excited. It's an offtake agreement, a binding offtake for 100,000 PM executed for DSO. It's with a Chinese vanadium company. I don't have no idea. So a subsidiary of Vanadium Resources, or VR8, has signed a binding 2-year offtake agreement with China Precious Asia. sometimes don't like how the way Chinese companies name their companies, like Good Bank or Great Bank or something like that. Anyway, I'm just being stupid now. Anyway, CPAL for the supply of vanadium rich magnetite direct shipping or DSO for the world-class steel port drift vanadium project in South Africa. Just a spelling of steel port drift, that port in the middle suggests the Dutch portion of South Africa. That's just me just seeing POORT and thinking Dutch. Okay, they go on talking about there's no standard price, spot price for DSO products. So there's some sort of terms or pricing terms, and the company's agreed to supply an average of 100,000 metric tons of DSO per month to CPR over a 2-year period. So the interesting thing about this is I'm not usually a fan of offtake agreements because I've seen plenty of times these offtake agreements go nowhere, plenty of times over the last 10 or so years. But the interesting thing about Vanadium is they released, or this is a second offtake agreement the company has issued or released or whatever, agreed to in the last month and a bit. So the last one was updated DSO offtake MOU agreement signed to unlock early cash flow on the 17th of June. And if you have a look at the chart, you'll notice there was a good reaction to that one, but then the share price pulled back. But this one, we've seen higher volume and the share price has remained high. It's just so slow sometimes. People say it's just, I've got too many tabs open. It's not that at all. I've tried. I'll get rid of some of the tabs, but that's about it. Anyway, so they released the first offtake agreement on the 17th of June. You can see a lot of selling came in on that day, which is understandable. Share price did nothing after that. And now we've seen this other one. Now we have seen a little bit of selling today. Just a little bit of selling, not as much as we saw on the 17th of June, and much higher volume. So this is a little bit more powerful. And the very fact that this is the second one in the last month in a little bit maybe adds a little bit of more validity to Vanadium and decreases the risk, but not the sort of announcement that would get me overly excited. But this chart doesn't get me overly excited, but it is way more exciting, in my opinion, than the announcement itself. So that's the top gainers by percentage change. Now, if we turn our attention to the top gainers by market cap, you'll notice a lot of mining or gold companies here. Ramelius up 8%. Insignia is not a gold company, but they are. There was a takeover bid, so we can move on. Spartan Gold, West African Gold, Stanmore, Coal, Imdex, Mining Services, I think. Pantoro Gold, Qoria. I'll talk about that at the end of the video. Dateline Gold, I'm assuming. Botanics is not gold, although I'm very happy it's up 10% because I'm trading it right now. Coronado Coal, so coal must have had a pretty good day. I'm hoping Whitehaven had a pretty good day because I'm trading Whitehaven as well. Let's have a look. Whitehaven. Yes, go. 2 thumbs up. Okay. Rox Resources, gold. They did release something interesting yesterday. Worker. Another pretty good day for Worker. That chart's looking really good as well. So some interesting company. Oh, Credit Clear. Company in my top 5 stocks. There you go. Okay, now on to the top losers. I do find it harder to find a top loser than a top gainer. I can see Platformo down 28% on no turnover. I've never heard of Platformo, even though it's in the technology sector. Unless they change the name. They could have changed the name. I'll talk about Falcon Metals in a second. But other than that, Strike Energy, there was... Oh, what happened with Strike Energy? Something to do with acquisition, Strike. No. Someone's putting a lot of money into Strike. I think it's Carnarvon. Don't know why share price is down. Strategic investment by Carnarvon Energy into Strike Energy. Strategic placement. Oh, okay. Strategic placement. That's why the share price is down. Okay, back on to the top losers. There was nothing much else here. Imogen's down, but share price or the chart of Imogen seems to be in a bit of a downtrend right now. But nothing else really to discuss. So we'll get back to Falcon Metals in a second. Just want to have a look at the top losers by market cap. So we have some lithium, Audinate. So some of these companies have had a pretty good few days, like Sierra Resources, share price has popped up. So no surprise, share price has pulled back. Premium, very close to getting my top 5, but I decided not to include that. They did release a bit of a trading update. Down 6.45%. So maybe I'm being a little bit unfair on Premium, not including the top 5, although that's weird wording to say because it's actually down. So maybe I'm not being unfair. Okay, let's have a look at Falcon Metals. Falcon Metals, FAL, share price down was at 15%, 17%. On soil anomaly extended 5.8 kilometer strike at Erabidi. Now, why am I talking about Falcon Metals? So this is sort of an announcement where I go, nah, whatever. But on the 11th of July, they released an announcement. First wedge hole at Blue Moon hits 1.2 meters at 543 grams per ton. Holy dooly. So let's have a look at the chart. And this is the reason why this is, or I'm talking about this, because this chart looks spectacular. Okay, so share price popped up on the 11th of July. For some reason, I put this. Okay, definitely see why I put this purple box there. Don't know when I looked at this company last. Maybe when they released that announcement. Share price has gone on a massive run, and then the share price has pulled back today. We want to see this pullback. It's a very healthy pullback. How far the pullback goes, no idea. Look at that volume, massive volume coming in as well. So the reason I've included Falcon Metals in this video, even though it's in the loser list, is not because it's doing badly. This chart is spectacular. Would I trade this, however? Probably not. A little bit too much of a day trader thing, I think, right now. But if I do see the share price fall, say, towards 44 cents and then stabilize, it could be a nice little low risk trade. Okay. Now on to the top 5 stocks of the day. Starting off with West Coast Eagles. West Coast Silver. I'm going to keep calling this company West Coast Silver. Now, this morning, this company, you know why Falcon Metals might be down? There's some sort of relationship between West Coast Silver and Falcon Metals. You can see so normally this is that West Coast Eagles, Silver announcement. So there's some relationship between them. I don't know what that is. But maybe Falcon Metals is down because West Coast Silver went into training halt this morning. Now, the reason I'm talking about West Coast Silver is because last night they released an announcement at 6:33 p.m. Significant silver fieldwork assays from Elizabeth Hill, and initial reaction from the market was really positive. In fact, indicator price was up about 10 to 20% before they released a trading halt. And this is really intriguing. I'm seeing this more and more now. And that is when a company releases a really good announcement, they go into training halt to do a capital raising. So we saw this with Vection Technologies. We saw this with Elsight yesterday. And today we're seeing with West Coast Silver. It seems like these smaller companies are getting advice from investment bankers saying you should do this. And I disagree with that. What they should do is release a really good announcement, wait for the positive reaction, maybe a few days, and then go into a training halt to do a capital raising at a significantly higher price. So you get a much less lower or higher capital raising price. So a little bit peeved off that doing this. Now, that's the reason I say that is because there was that initial reaction from the market. And the reason I say that is you can have a look at the indicator price just to see how the market might be reacting. And the price was up about 10, 15% before they went into a trading halt. So this is a capital raising. The other thing is the chart for West Coast Silver, I always have to think because I'm going to say West Coast Eagles and I might not pick up on that. West Coast Silver, the chart for West Coast Silver looks really good. This is a beautiful breakout, by the way. So they did release an announcement last week, which I thought was a really good announcement. It was high-grade silver intercepts near surface at Elizabeth Hill. I thought that was really good. Or maybe it was a significant silver fieldwork. No, that's today. No, that was last night. No, there was the high-grade silver intercepts near surface at Elizabeth Hill. That was the really good announcement. That's why the share price popped up. And share price got above 10 cents. We saw the share price react really good the last few days. So the really good positive momentum behind the share price of West Coast Silver. And there is a chance this capital raising will destroy this positive momentum. There is a chance it will completely destroy this positive momentum. Now, the other thing going for West Coast Silver is silver. Silver chart is looking really good as well. For those who haven't looked at this chart for a while, let's have a look at it right now. This is a great looking chart. It's one of my favorite commodity charts. This is a beautiful uptrend for silver. Okay, so that's West Coast Eagles, silver, coming in at number 5. Coming in number 4, we have Metro Mining. Share price down 4.23%. At one point today, the share price was down about 10%, maybe even more than 10%. Yeah, more than 10%, which surprised me a little bit. They did release their Appendix 5B today. Now, this company is bauxite. So bauxite, alumina, aluminium. They have operations north of Weipa. If you don't know where Weipa is, just have a look at the map of Queensland. So it's on the west coast of Cape York. It is, they have a wet season up there. So Metro Mining does close down operations for a month or so during the wet season. So when I show you the cash receipts history, you'll notice in one particular quarter, cash receipts drop. But what I did with this one, and this is what I do for all companies, is I have a look at the quarterly results numbers, and I thought this was really good. Now, maybe they missed expectations because the company did release a trading update on the 4th of July. So there's a chance that maybe these numbers were a little bit below expectations, which could explain why the share price is down. But $114 million receipts. Now, in isolation, that means nothing, but I'll show you how this compares to previous corresponding periods. So $114 million in receipts, operating cash flow positive by $26 million for the quarter. Now, you can't analyze that because they do have a quiet period. Free cash flow positive by about 21 million or so. So it's a pretty good quarter for the company. They have no debt, if I remember correctly. Oh, they do have a little bit of debt. I thought they had no debt for some reason. So $86 million of debt. For some reason, I thought they had no debt. Did they mention that in the commentary, or am I thinking about a different company? I don't know. For some reason, I thought this company had no debt. But anyway, let's have a look at this company's, what do you call it? Cash receipts history, MMI. We've got to go the right way. There we go. MMI. So this goes back to the start of 2022. And you notice that in the March quarters, very little receipts, although it has climbed, but very little receipts. Now, the thing I like to do is just compare the receipts this quarter to the previous corresponding period, and the receipts have increased significantly. Now, there is a bit of difference between receipts and revenue, so sometimes that can explain why receipts can be quite lumpy. And you do have to be aware of that, but a really good jump in receipts. And the last three non-seasonal or non-wet season quarters, receipts have been above 100 million. So, and you can see a definite uptrend here over time. You don't have to be a mathematical genius to see there is an uptrend in the receipts, and that is exactly what I want to see. So I was a little bit surprised that the share price was down, or is down today, was down because market has closed. But again, it could be because maybe the numbers were a little bit below expectations. But the chart also looks pretty good. I like this chart as well. It's a sort of a slow burn upwards. And in a way, I do like these charts even more. Now, this is the daily chart. So if you go back to start of 2024, share price of this company has gone from 2 cents up to 6.8 cents. The other thing I should mention, the market cap of this company is about 450 million. They do have a lot of shares on issue, 6 billion shares on issue. So that could be a bit of a turnoff for some people. And I'll be honest with you, that is a little bit too high for me, particularly for a company this size. Now, if you have a look at the weekly chart, I do like this weekly chart as well. So the daily chart looks good. The weekly chart looks really good as well. And again, sort of like a slow burn upwards. And I love these sort of charts. So I can see just before the moving average crossover, share price going sideways for a long time. In fact, going sideways for about 3 years. It's a beautiful weekly chart and a beautiful daily chart as well. So maybe one to put on your watch list if you want, or maybe one to even trade. Okay, coming in at number 3, we have a company I've never looked at before. Streamplay Studio. Share price up 14%. Now, the first red flag is the share price is below 1 cent. So that is a bit of a turnoff. But first time I've ever looked at Streamplay. Now, when I say look at it, I mean more than just looking at the numbers. So whenever I open up an Appendix 4C, I go straight to the numbers. And if I don't like what I see, I move on. Don't even look at the commentary. But when it comes to Streamplay Studio, this is the first time I've gone, hello. So they were operating cash flow positive slightly. Now it says 390,000 here, but that's with the help of government grants and tax incentives. And I like to exclude that. So if you exclude that, they were operating cash flow positive by $27,000. It's positive. Okay, it's a small amount, but it's positive. Unfortunately, they were not free cash flow positive. If you exclude intellectual property, they were free cash flow negative. But it's a positive. It's a positive, operating cash flow positive. So I did have a closer look at the company, and it seems like they make computer games. They talk about Noodle Cake. They also talk about an agreement with Amazon, which is sort of exciting. They also talk about Ultimate Chicken Horse and Super Flappy Golf. I have never heard of any of these. They also talk about different countries. So I'm not sure what PlayStream is, but they talk about PlayStream UAE, some sort of product integration for Sri Lanka. They also talk about Papua New Guinea somewhere in here, like small, poorer countries. Yeah, Papua New Guinea. So I'm not sure what all these is. They're talking about UAE, Sri Lanka, South Africa, South Africa. So not a company I know much about, but they were operating cash flow positive by a small amount. And that's all it takes for me to go, oh, interesting. Now let's have a look at the cash receipts history. So where's the search button? There it is. SP8. So not much history here. And before the last two quarters, yeah, very much a meh. Now, receipts did jump up in the March quarter up to 1.6 million. I'll probably just ignore that. And now we've had a second quarter where receipts are above $1 million and they're operating cash flow positive. So maybe this company is on the right trajectory. But at this point in time, with the share price below 1 cent, I just need a little bit more proof for this company. And let's have a look at the chart. And I suppose the chart probably agrees with me. I don't think the chart, whenever you see the share price below 1 cent, the chart is not going to look good. And this is the way it is. So let's have a look at Streamplay Studios. Whoa. Gee, the share price went up to 17 cents back in 2020. There you go. That's like the Matterhorn pattern. And the chart, the daily chart looks like a big meh. Big meh. There was some sort of interest in late November. I actually did have a look at this. Share price popped up on the 14th, 25th of November. Oh, that's right. They went into trading halt. Now, the share price popped up on the 14th of November, went up 37.5% on OK volume. I didn't want to see what happened here. And they were in a trading halt for about 11 days. In terms of an acquisition, they acquired Noodle Cake or something. Let's have a look at that. I think it was Noodle Cake. So yeah, the share price. Oh, that's right. The share price popped up, and there was on no news, and the company went into trading halt. Then suspension on the 19th, and then on the 25th they announced they acquired indie gaming leader Noodle Cake Studios. There you go. So you can see what happened after the share price rose; it fell back away. So that was not a powerful announcement. For a powerful announcement, share price will not pull back like this. Okay, so the chart does nothing for me at all. Sorry, Streamplay Studios, but if you keep on releasing these sort of quarters, that could change. Coming in number 2, we have Credit Clear. This one is interesting. This was a beat. I'm always looking at beats, and I always like beats. In fact, in the highlights section, they just mentioned underlying EBITDA up 76% of 7.4 million, exceeding prior guidance expectations. Margin expansion. I love it when I see that sort of highlight. Margin expansion. Record revenue 46.9 million, 12% increase. Strong balance sheet, but that's yeah, it's subjective. And yeah, that's all I needed to read to think this is a pretty good. I like this. The only problem I had with Credit Clear until today was the chart. So there's a chance this chart is looking a little bit better now. Possibly even to the point where I might say, it's looking intriguing. So Credit Clear has been on my radar for a while, but I've never actually took a position. Share price was in a pretty nice uptrend until February, March, when the share price fell for some reason. Share price found a floor, started to move higher, and today the share price is at about a 4-month high. And we've had a moving average crossover as well. Now, I would prefer the share price to be at like a long-term high, maybe a year high, year and a half high. But it looks like maybe the sentiment has started to shift. I would also prefer a little bit higher volume. The volume has been a little bit weaker than what I would like. But a pretty good announcement from Credit Clear, and the chart is starting to look a little bit better as well. And the other thing is, this is not a storage stock. They have positive EBITDA, growing revenue, margin expansion. So pretty nice announcement from Credit Clear. Okay, coming in number 1, we have Bet Makers. Not bed makers, bet Betmakers. Share price up 25%, which is the reason why I've included Betmakers as a stock of the day. If the share price was only up 5%, probably would have not even included Betmakers in the top five, to be honest with you. Now, there is a reason why I do like this announcement. There is also a reason why not quite there yet. Okay, so the reason I like this announcement, and if other things were going for BetMakers, it definitely would have been number one, even if the share price didn't rise 25%. And the reason behind that is the company was operating cash flow positive by 3.4 million in the quarter. Wowzers. So that is always going to draw my attention. Operating cash flow positive 3.4 million. But that's not the end of the story. They also have the year to date operating cash flow positive 2.7 million, receipts up to 91 million. So this company's generating a lot of revenue and receipts. And now, one of the reasons why I was not completely drawn to bet makers is because if we have a look at the receipts history, which I'll show you in a second, receipts haven't really done anything for the last 4 years. They're just going sideways. There's no trend here over the last 4 years. So this is what I want to see. I want to see receipts going up, but we're not really seeing that just yet. So there's a chance the reason why the company did have an operating cash flow positive quarter is because they've decreased costs, and that is something you can only do finitely so. Uh, because if a company can't increase their revenue or their receipts to become more and more profitable, what they can do is increase their margins or decrease their costs. And you can only increase your margins or decrease your costs so far. But what you can do is increase your revenue infinitely so. So that is why I always look for revenue growth. I want to see a company growing or becoming profitable and more profitable through revenue growth, not through margin expansion and or decreasing costs. I want to see that revenue growth. Anyway, so that's my one little red flag against bet makers, but maybe this is the start of a good period for the company. You could actually have a look at the commentary just to see what they're talking about in the key highlights. So they're mentioning revenue, 22.6 million, up 8.9%. Gross margins, a nice increase in gross margins there. So that could be a reason why they've become operating cash flow positive, but they can only increase so far. Record adjusted EBITDA of 3.2 million, operating cash flow positive 3.4 million, and cash of 18.8 million. Company has a market cap of 130 million. Oh, I could be wrong here. 130 million? 137.3 million. They do have a fair bit of cash, by the way. They say unrestricted cash of 18.8 million, but I was thinking 30 million for some reason. Yeah, 30 million. They have $30 million of cash. And do they have any debt? I don't think they have any debt. Yeah, so enterprise value of about 100 million. So that could be okay. But the market has reacted really well to it. So let's have a look at the chart. Let's see if I get more excited just by looking at the chart. And not really good volume coming through today, which might be relevant. But share price has been going sideways for a while. Bit of volatility in that sideways move, by the way, but not really a breakout. Look at that. Look at how trading view is just so slow. It could be the time. Maybe this is another reason why I should record at 3 less. My parents are getting fiber to the premises. They have fiber to the node, and I have noticed fiber to node can be quiet if everyone's using internet at the same time. But anyway, they're getting fiber to premises because I told them to. It's free. Get it if it's free. Jeez. Anyway, if you have a look at the daily chart here, share price has been going sideways for a long time. In fact, I'd say it's been going sideways for 2 years. So it's primed for a breakout. It really is primed for a breakout. So that's bet makers close to breaking out, but not quite there just yet for me. Okay, chart of the day. Orbital Corporation. This is an interesting one. This is an interesting one. So I featured Orbital Corporation in the technical update video on Sunday because the share price or the volume had increased significantly. And here we go. Look how slow this is. It's ridiculous. It has to be training view. This sometimes happens with training, and people keep saying, "Oh, you got too many tabs open," but I'm going, no. Oh, it's just ridiculous. Maybe just totally reload it. Yeah, see, that opened up really quickly. You can see some of these stuff on the right are not opening up at all. Anyhow, this is a chart for Orbital Corporation, and unfortunately, we don't have a volume. It's thinking, it's thinking, it's thinking. I'm not going to say anything else about TradingView. It's been really disappointing lately in how slow it has been. Anyway, this is the chart for Orbital Corporation, and the reason I featured this company in my technical update was just the increase in volume. And I have heard and I've read that volume sometimes precedes price. So I was saying in that video that we haven't seen any sort of price action or price reaction yet until yesterday. Share price rose 25% on the highest volume, and today share price flat, which is okay. It's okay when you see a massive rise in share price flat. And I have a feeling this is just based off nothing company's doing. It's just a sector. They make motors for drones, and that's probably the reason why the share price is up. Just a sector they're in. But we've finally seen the price action, and I just wish I was more confident in acknowledging that, yeah, sometimes price action, maybe all the time, price action precedes, no, volume action precedes price. And if I had confidence in that, I would have taken a position in Orbital Corporation. Okay, so I am coughing a little bit, but I am not sick. Well, I feel fine, just a little bit of a cough. Okay, Richard Benevic. Hi, Kneppy. Good announcement from Qoria. He talks about EBITDA. EBITDA was really good. I'm going to admit something. With a company like Qoria, I ignore EBITDA. I totally ignore EBITDA. The reason behind that is earnings before interest, taxation, depreciation, amortization. Depreciation, particularly amortization, is really high for Qoria. So I tend to completely ignore EBITDA. And I'll show you in a second. Actually, no, I should do a standalone video on this. No, I'll do it. I'll say it now. Uh, so the whole reason why I ignore EBITDA is because, let's go to Qoria. In fact, I can show you, by the way, good reaction from the market, and it's understandably so. I think this company, although it does have a high valuation, 600, $700 million. So there's always already a lot of promise or potential priced into the company. And if we have a look, here we go at their Appendix 4C. So receipts 21.2 million, operating cash flow negative 4.5 million, but for the year $10 million. Now, for me, you need to dig a little bit more deeper. Just don't focus on operating cash flow for these type of companies. And the reason why is they do capitalize a lot of research and development, and they either put that spending into intellectual property or other non-current assets. And for this type of company, you can see that's a massive expense. $6.2 million for the quarter and $20.9 million for the year. So in my opinion, you do have to take that into account. And what they do, I'm not an accountant, but what they do is they amortize that. And the amortization for this type of company is going to be quite big. Maybe not $20 million, probably less than that. And the way you can look is just go to the most recent full year. Let's do that. So what do we expect? Maybe the amortization is 15 million, 15, 20 million. I don't know. So let's go back to the most recent full year results. So we have to go back 1 year, by the way. And we'll have to open up the annual report. Oh, this is going to take ages. Oh, no, it didn't. I don't know why. For some reason. And what you want to do is go to not the notes. Oh, not the notes. Here we go. Operational. Oh, I'm way too high up. Nope, nope. Here we go. This is the profit and loss statement. So nice revenue, but you notice the loss is $60 million. Must have had a one-off or something. Did they have one-off? No, they didn't. But depreciation and amortization, 31.5 million. There you go. So if you go to note 5, so let's go to note 5. Where is it? Note 5. They would have a amortization of intangible assets, 23.4 million, and that is their capitalized research and development. And that's an ongoing thing. In fact, it's increasing. So I don't look at EBITDA for these type of companies. That's not for me. It's more cash flow. I wanted to see cash flow or free cash flow positive, not operating cash flow positive, free cash flow positive. And for me, when it comes to free cash flow positive, I include non-current assets or intellectual property. So this company is still well away from that. In fact, if you include capital expenditure, So it's about 27 million. So they're about $17 million of free cash flow negativeness. So that's just me. That's the way I look at these sort of companies. So I totally ignore EBITDA. That's why they are EBITDA positive, but still have a pretty big loss. It's because of amortization. Free cash flow, yeah. In fact, you mentioned it, financial year 25, operating cash flow 15 million, but free cash flow negative 11 million. That's because of what I think. But apparently, according to Richard Benovic, management expects to achieve positive free cash flow in calendar year 2025 and financial year 2026. If that is true, and the true or my definition of free cash flow, that is exciting times for Qoria. I can definitely see why the market is excited about this company, but my other problem is there is already a lot of promise based or already there's a lot of potential already priced into the company. Now onto the chart for Qoria. And and interesting day, by the way. Share price as low as 41 cents. Let's have a look at this. Yeah, so share price went from a low of 41 cents to a high of 51 cents. A lot of volatility today. Uh, so that's interesting that the market wasn't quite sure how to read this. And maybe initially it was a bad read. Let's have a look at the 1 minute chart. I'm sorry, I shouldn't be doing this with TradingView because it's so slow. Wasn't this slow yesterday at the same time? Yeah, there was initial selling off and then rapid. So share price went from 41 cents to 51 cents in about an hour between 10:30 and 11:30. So a really interesting reaction from the market for Qoria. Otherwise, the chart looks meh. Yeah, it looks okay. No problems. If you have a look at the weekly chart, this is the sort of weekly chart you'll get with these sort of companies because it's really hard to find a real or true value for the company. And in fact, if you asked 100 people what a true value or good value for Qoria is, you're going to get a wide range of numbers. And that's why the share price of this company just goes up and down by extremes. In fact, yeah, you just trade this company. But the weekly chart looks okay. You don't mind this weekly chart. Very close to breaking out. So above, if we go back to the daily chart, very close to breaking out. In fact, you could put a little bit of a resistance right there and very close to breaking out. Okay, that's all I have for this particular ASX Daily Rundown video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.